you're going to see all these workings that have been happening, and all of a sudden it's going to explode and be like, well, that came out of nowhere. It has not come out of nowhere. There's a lot going on behind the scenes that aren't always in the news media outlets of adoptions happening.
All right, and we're back like we never left. Welcome back to Crypto Convos. I'm Brian. We got Lionel in the house, and today what's up, man? You're back, dude.
Yep.
You've been all over the world, but we're here. We got Kyle Hutter. He is a financial advisor, been in the game for years, but this is not financial advice. This is just our opinions. And welcome, Kyle. Thank you for being with us.
How you doing, guys? Excited to be here. Thanks for having me.
Excellent. Yeah. So our listeners, you have a lot to share. We've talked many times. Your insight is very, very crucial to the moves that we make out here. And being a financial advisor, you really have a really good macro view of what's going on. So let us know, what's going on right now. We know inflation is hitting, the value of the dollar is going down, and let's put that together for our listeners so they can kind of understand why we're in this space and what's really going on.
Yeah. So now I think you talked a little bit about, inflation. I think that seems to be, everyone's concern at the moment. I know that's what I'm hearing a lot about. And, you go to the store and you see things are more expensive, right? And, what's the reason for that? What's going on? I think there's a lot of theories, obviously, that are out there. And, one of the big things that you hear is, supply chain. Right. Yeah. Shut down the pandemic, things get, blocked off. Like where do goods come from? And that's tough. Obviously, you also look at, perhaps printing of money. Right. What does that mean? When people have more dollars to spend, right, there's higher demand for things. And, if you have a lower supply and higher demand, right, things become more expensive. So you get a mix of a little bit of the both at, current time. Obviously you're seeing, 8.5% inflation, year over year, highest numbers since the 70s and 80s, definitely a little bit different economic environment. But the concern's there. So.
Right.
Mm-hmm. Yep.
Would you say that is a good sign for crypto?
Well, I wouldn't necessarily say it's good or bad for crypto. I think that, one thing that's really exciting for crypto, when you're looking at the positives is going to be, institutions getting involved, right? Up to this point, right? Yeah. You've probably seen a lot of retail getting involved, maybe a little bit more speculative than not. But you're starting to see, real utility, from projects and from these, utility tokens, getting into play here. So I think when you're looking at, inflation being good or bad for crypto, I think a lot of people are turning that way just due to the fear, of what that may bring. But currently right now, I wouldn't say it's good or bad. I think there's positives and disadvantages to both.
Oh, okay.
So, yeah.
Mm-hmm.
Go ahead, Lionel. You got it.
I was just going to say, what are some of the disadvantages of, like how you said there's positives and disadvantages?
To what specifically? You mean
to both to crypto?
Oh, okay. You mean for inflation, that is?
Mm-hmm.
Yeah. So, well, I think when you have a market that's fearful, right now, the crypto market, for instance, you're starting to see a little bit of of the asset class kind of, not being correlated with the traditional markets like it has been in the past. You look at March of 2020, right? The last recession we had, even, you'd like to say Bitcoin wasn't completely correlated with the markets, but the crypto market did come down with it. So, those that have spare money to invest, you're going to see a lot more going into crypto. At the same time, right now, right, if, you don't have that spare money to invest, for instance, right? Well, there's not a lot of money going into any markets then. So I think you're going to see, of course, more money going into, perhaps different asset classes at the point, but that would be a disadvantage, right? If you're having a tough economic environment, there's not as much money going into these asset classes. So that would be the disadvantage, right? Mm-hmm. But the big thing that we've been talking a lot about is, are the big boys, the institutions, going to get involved? And you've been hearing a lot of it. And one of the things that's really held that back is regulation in the industry. I really think regulation is going to be more of a positive than a negative, right? And, I think, big companies, for instance, are afraid to get in because they're saying, well, what if we get in and then, perhaps you have certain things that happen that say we shouldn't be in this at this point in time.
Right.
So that's where you have this, whole dynamic of the traditional and the new asset class coming into play here. And how does that play out moving forward?
Well, being in crypto, one thing that I love is that it kind of peels back the curtain. And it makes you pay attention to what's going on, with the IMF, with the World Economic Forum, with the Federal Reserve, and we're hearing about this new system that's coming into fruition, and the new infrastructure for the banking system. For everybody who's not familiar with it, what is this new Bretton Woods 2.0 that they're talking about?
Yeah. So to give a little history to kind of lead into what's going on, I think we talk a lot about, kind of the old system first, right? You talk about after World War II, our monetary system being backed completely by gold, right? We held gold, foreign trade was done with US dollars, right? So people needed dollars in order to do trade and get goods. One of the big events you probably hear, perhaps on social media, what happened in 1971? Well, at that time, right, the U.S. temporarily came off the gold standard, meaning if you had dollars and you wanted to go get gold for that, right, you couldn't do that anymore. Okay. So, that created what we call today, right, the fiat-based system, right, debt-backed, what's this dollar really mean? So as you're getting into, today, right, and we saw some recessions over the past couple of decades, which I think really led into kind of what we're seeing today, where, is there enough liquidity, for instance, to get around, right? Obviously, with our banking system today, I think it was 10 years ago at this point in time, but banks only had to hold 10% of your money. Right? They can lend out the rest or create more money, right? So you give the bank $100, they only need to keep $10 of your money for you, and they can loan out the rest.
And they say crypto's risky, right?
So I think a couple years after, 2008, 2009, they actually took that. So now they really don't have to keep any of your money. So if you're thinking about it that way, if everybody went to their bank to get their dollars that are there, right, it wouldn't be there. Right. So, having liquidity is a big deal. So when you see perhaps drops in markets, overwhelming and people are trying to get their money or, of course, trying to pay out someone's losses or gains. Right. Is it going to be there having liquidity? OK, so that's where, if, we're looking at, say, possibly moving into a new system, for instance. Right. Combining this traditional and crypto markets would provide perhaps liquidity at all times, no matter where you're at, because it would always be there, right? Now, what would keep that back, right? So right now, I think a perfect example is if you're trying to send money to somebody, right? I want to send it, say perhaps to you, and I send it to your bank to, through the, the current system, it may show up in your bank account with the dollars and cents, but it would really take 2 to 3 days to finally settle and finalize, right? Or perhaps another example would be if I'm trading a stock or a bond and I'm trying to get that back out to use it as cash, right? You trade it, it could take a couple days to finalize and settle, right? 2 business days, and then you try to get it out of the bank, another couple days to get it to your bank. So this is where crypto could instantly settle, for instance, or a digital backed currency can instantly settle, a lot of those liquidity concerns would end up going away. But we don't think about that because on our phones, you still see it electronically, but there's a lot going on behind the scenes that we don't always see.
So that's a great segue into the next question and topic that we need to talk about. And that system right now for cross-border payments that we're using worldwide is SWIFT. And we're hearing a lot of that in the news about, taking Russia off of SWIFT. And the biggest case, and probably the first regulated crypto, XRP, the company Ripple, which makes that, is in the battle with the SEC right now, and things are looking pretty good. Explain to us what SWIFT is and what is going to potentially replace that, and how XRP works in that.
Yeah, so I think from what you're looking at, from kind of what I've read and seen as well, you really don't know what's going on behind the scenes completely.
Yeah.
Right. Obviously you do have the SEC has sued Ripple for selling unregistered securities. Right. And, what's a security, right? And if you're buying perhaps XRP and you're going to get a profit from that based on the company, providing value. That's been going on for about a year and a half now. Really don't know how that's going to, come out to be. But what Ripple's trying to do is really, kind of replace SWIFT, where, it takes a lot of days and it costs a lot of money in order to, send money to another country, for instance. Right. So if you're trying to send money to your family or a friend overseas, it's going to cost you a lot of money to send $100, and it's going to take a lot of time. Okay. So what they're trying to do, of course, is make that faster and cheaper. Right. So the SWIFT system right now, obviously, is very based on, the US dollar being this world reserve currency. So, obviously with what's going on in the war in Europe, you hear about taking Russia off the SWIFT system, right? Well, how are they going to trade with the rest of the world? So I think there's, perhaps some trust being lost between countries, based on who's in control of these systems. So if perhaps there's, a formation of a new type of system where it's more decentralized or based on, I don't need to trust a certain country in order to trade with them, right? Perhaps that takes away some of the uncertainties that were there before. So, you hear a lot about the BRICS countries, perhaps, Russia, China, India, coming together to perhaps form their own thing. But again, right, how's that going to play out moving forward? But I think we're seeing this being a possible solution to have that trustless system.
Wow. It's a really interesting time that we're living in, really. Honestly, a lot of things seem to be getting figured out right now, that within the next couple years, we could be looking at a whole different scenery when it comes to finances in general, globally.
Yeah, absolutely. I don't know if you guys are familiar with Ray Dalio. I'm a big Ray Dalio fan, macroeconomist, hedge fund manager. His outlook on it, as we see kind of replacement of certain systems, whether it's every 60 to 100 years. And he says we're kind of going through that at this time, right? I don't know if it's going to be as quick as everyone may say. Like, it could be something where we're starting to merge these systems together and, making sure all the systems interact with each other, which is tough technology. I think the internet's a good example, right? Where you're able to exchange information, freely, right? Mm-hmm. Well, they never really were able to exchange value freely, right? Because you want to have security, ID behind it. What types of technologies will come about to make sure it all comes together?
Right. So in that reminds me of thinking, with regulation also comes usually insurance and, reliability. And I think that's where some of these corporations and serious investors are thinking, what if we dive into this crypto thing and there's a big hack and it's just gone because there's no regulation, there's no, insurance or accountability behind it. No one can get sued or prosecuted or anything. So I think that that I haven't really thought about that before. Usually I'm the kind of guy who's anti-regulation, and everything. But thinking of, what you were saying earlier got me thinking about the other side of how this could really be a good thing for crypto and for everything in general when the man gets involved.
Yeah, no, I understand what you're saying. Of course, it's, do you want too much regulation involved with it? How does that impact, growth and innovation, in the field itself? But as you kind of back into what you're saying as well, right? And when you're talking about billions of dollars being, sent from place to place, you want to make sure you have some security and protection involved in that, right? So as you kind of move into the stuff, with perhaps digital currencies, there's going to be a lot of good things, and there could be some bad things involved with it too, right? You want to make sure protection's there. You want to make sure that, perhaps our privacy is protected as well. I think we found with crypto, that you've heard a lot about, well, you can't track it, you can't trace it. Well, yeah, I think you've heard recently, you can definitely track it and trace it, and it's probably easier than tracking and tracing physical dollars.
Yes.
So how this technology is used moving forward, right? You just want to make sure it's used for good and not perhaps those bad things that many are worried about.
Yeah.
The whole point, that the whole reason that we're in this is because many people, we just don't trust our government. Right. Especially when it comes to, our finances. So Bitcoin is that asset that it's totally decentralized. So we know that we have our money. Right. And regulation is good, but the point is to own your private keys. A lot of retail investors, our parents aged, these big corporations, they want to hold it. They want exposure to it, but they may not necessarily own their crypto.
Yep.
Am I correct?
I think it's a great way to put it. It's a great way to put it, right? Having your own keys, putting it on something private that you own, right? You actually have it, right? And that's where, you look at the traditional finance sector where you're seeing, people getting into it. But the older generation also, they're used to having someone custodian their investments, right? What's a custodian? Well, someone's holding on to that and it's insured and it's protected, right? To make sure it's there. So that's where, you also are going to see this mesh coming forward, where you're going to see these institutions and banks holding coins for their clients. Right. And I think, perhaps the younger generation, may want to hold it themselves. Older generation may want someone to hold it for them. Right. Well, I think that's a system that could work together, regardless of what people's preferences are.
Yeah.
I think, again, the regulation comes into play where you get rid of some bad actors who are trying to, hack everyone's personal property, for instance.
Mm-hmm. Yeah, that's interesting that Bitcoin was originally created and seen as an alternative decentralized currency, but now there seems to be a bit of a balancing act in play between the centralized financial industry and the DeFi that's emerging, and the companies that are going to be the custodians or the decentralized wallets that will be used by the tech savvy people, and then the grandmas will be on Robinhood and Coinbase and crypto.com, or just the people who trust and don't want to worry about it, but it is also really good to see that there will be those options available, whereas right now we don't even have those options when it comes to like decentralized currency and actually owning our money and still being able to use it globally without interacting with, Swift and everything like that. So it's cool to see that things could potentially open up and we'll have those different avenues and ways to deal with finances.
Yeah. Yeah, no, I think that's a perfect way to put it, right? You're starting to see even more companies come out with debit cards where you can pay with your crypto. That's creating, more opportunity, right? So these systems are going to interact with each other. I think you talked about earlier when we were coming to, talking about through inflation, right? So we coming back full circle, right? As your dollar, right, is unfortunately it's not able to purchase as much as it was 50 years ago. I think 1970, you needed today $8 to purchase the same that $1 could purchase in 1970.
Wow.
No,
Yeah.
that's the concern where, perhaps you're seeing, people now invest or place their currency, right, in some other projects or protocols based on, their belief that this will keep its value and its purchasing power. Right. So at the same time, right, you're not going to want to always pay in Bitcoin moving forward either. So I think the interaction of the two is going to mesh well. But who knows how it actually plays out over the next 5-10 years. But
well, what we do know is that there is going to be an infrastructure for this system, and there are going to be technologies and coins, and these ISO 222 coins that look like they're going to be the technologies that build the infrastructure. Can you talk to us a little bit about, what those protocols are and how they're going to work and the upside for people investing in those currencies potentially?
Yeah. So again, right, you read a lot of these white papers, for instance, and you see these coins being mentioned and how they're going to come together. But again, I'm going to go back to, we really don't know what's going on behind the scenes, but we know a lot of this infrastructure is being built. So, I think the value, the way I think about a lot of these tokens is I would look at them more as a technology company than a crypto. Obviously it's cryptocurrency digital assets, but like, where's the value for these come from? Like, what makes them valuable? So as you start seeing them being used in the infrastructure or for, being a payment or perhaps, trade routes, for instance, that's where the value is going to come from, right? So as they get used more and more, right, they're going to be needed, right, in this new infrastructure you're talking about, right? Now, again, how's that all going to play out? Not 100% sure, right? But you hear perhaps, XRP, for instance, being that cross-border payment solution, where everyone may have their own digital sovereign currency, right? But that's the way that you're able to pass money or from one currency to another immediately, efficiently, and very, very low cost, right? Perhaps, within, sovereign currencies, right? You have perhaps something like XLM where you're payment to payment, peer to peer, right? I send it to someone, where you're going to purchase something, at the local store. But how that actually looks, right? That's going to be what I'm interested to see moving forward. But I would look more at these, ISO coins as perhaps like technology companies that are going to, have value as more people use them, for things like this.
I've been telling people lately, because for the person who's 20 to 35, you look at the real estate market, it's going up. Of course, land is great. You want to have some precious metals. You want to be diversified. You want to have, invest in your businesses. But these cryptocurrency, this is an opportunity of a lifetime, and your grandkids and your kids, they're going to be asking you, what were you doing when this was going down, when the entire system was changing? Did somebody tell you, were you listening to crypto convos? Did you hear what Kyle said? And, I've really been pressing with people that, have a long-term plan, right?
Yep.
Have a long-term plan. Take a look at this stuff. Don't think about, what's going to be your short-term gain. This is for your children. And when we look back, 5-10 years from now, the early adopters they're going to be the ones that got the fruit, so.
Yeah, no, I think that's a great way to put it. I mean, this is the first time, and, I don't know, maybe not history, but I mean, that the individual that's not actually in it and, may not have access to the inner workings, right? Perhaps has access to this new infrastructure where that wasn't available in the past, right? You had to know somebody, perhaps you had to be an accredited investor, to get access to certain investments, right? But I mean, what are you doing today, right? Obviously, I'll, lean back on, have a financial plan, right? Have your budget, make sure you're paying off your debt. Yeah. With this, right? Obviously, we don't know exactly how it's going to go, but, you do your own research, you see that it's being used, right? Utility will be used. Dollar cost average what you can, right? $50 a month, $100 a month, right? You're going to see, obviously, the consistency over a long period of time, right? Pay off.
Yeah.
Right? So if you're looking for perhaps a short-term, moonshot, you may see it, right? But we don't know when that's coming. We don't know exactly how that's going to be. Of course, you have the analysts saying when and where and how, but this is a long-term game, all right, regardless of any investments you're looking at, whether it's in traditional markets, your real estate market here, right? You're putting that in for the long run because you really don't know, right? So have a consistent plan, do your own research, dollar cost average.
And everybody gets excited. And again, I'm so glad you said it, the long-term macro view, not just I want to make money on SHIB or Doge, and if I don't get rich in a month after I invest, then this thing doesn't work. It's not that. It's the whole panoramic 1,000,000-foot view, looking down and really taking your time is what you're saying.
Took me years to learn that, so our listeners hopefully can learn from our mistakes in that as well.
With the volatility, Kyle, I know your finance is what you do, investing is what you do. We've had many conversations. I've made emotional decisions. Everybody makes emotional decisions in crypto except Kyle, because he knows how to invest properly. So just as some advice, like keeping your emotions out of it. How do you do that? How do you kind of keep that together and keep that long-term plan going?
Yeah, well, it becomes easier, right? Number one, if you have a plan, right? I think that becomes easier, but don't invest what you can't lose.
Yes.
I think that right there, because if you don't invest what you can't lose, right? You're in it for the long run then. And you may have the expectations, you may see, a big run up in the near term. If it doesn't happen, you're okay with it. Right. So, obviously paying off your debt, have your budget, invest what you can't lose. And then finally, dollar cost average. I'm going to continue to come back to that point because this is a volatile market when you're talking about the digital assets. Why is it volatile? Well, it's a not a mature market, right? It's been around probably for the last 12 years. You're starting to see a lot more money come in, a lot more money come in and out. You're going to see the ups and downs. As time goes on, it won't be as volatile. But if you're dollar cost averaging, perhaps every month, every couple of weeks, every paycheck, right? You're going to see that level off over time. You're not going to be so worried about the volatility.
Right.
You can get in at a low, you can get in the middle, maybe a high, but that's all going to average out over the long run.
Yeah. Yeah. When the dust settles, you'll look back and be like, wow, I'm glad I've been buying this for the past 2 years or whatever.
Yep. Exactly.
So, we're getting ready to go ahead and end this. Unfortunately, man, you've dropped so many gems on our listeners, and we really appreciate you coming on. But we got to get a prediction. What do you see happening for the rest of 2022? What do you see happening in the market?
Oh man, that's tough. I hate giving predictions.
Come on, man. That's why you're here.
That's the logical financial advisor in him.
You can't come back if you don't give one.
Right, you start getting me coming out on the predictions, right? I won't be able to make those rational decisions, as you said.
So you don't even think about that?
I think about it, right, as I'm kind of planning out. But in my mind, I'm like, well, I'm thinking 2025, right? 2025, that's my thought process, right? I mean, realistically, what's your
prediction for 2025?
Come on, man. Beating around the bush. 2025. Man, we're getting XRP Man, I can't wait till 2025. I'm tell you that much.
Yeah.
You're going to see a lot of stuff happen this year. You're going to see a lot of stuff happen early next year. You're going to see all these workings that have been happening, and all of a sudden it's going to explode and be like, well, that came out of nowhere. It has not come out of nowhere. There's a lot going on behind the scenes that aren't always in the news media outlets of adoptions happening.
Yeah.
So you're going to continue to see more adoption coming this year.
Yeah,
Awesome.
I was watching the playoffs last night, and man, you got Steph Curry talking about crypto, FTX exchange, and I'm like,
Tom Brady. Yeah.
where there's smoke, there's fire. It's starting to bubble up. It's bubbling up to the surface.
That right there. I just read, I think it was last night, I think it was Goldman, one of the biggest investment banks in the U.S. looking to buy FTX.
Yeah, these are people who don't play around. They don't, if you're seeing them talk about it, then it's where there's smoke, there's fire.
And they don't make mistakes. They make the game.
Mm-hmm.
So, I was talking to a group the other day, and, I was talking about crypto and said, this time your kids are going to look back, blah, 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 at least have a piece of the pie. And there was a lot of resistance from some other advisors. And I thought to myself, I said, don't you know that your company is buying up the Bitcoin?
Yeah. And that comes back to, right, diversify, right? Asset allocation, have it spread out. But like you said, get a little piece of the pie because you see where things are going. Institutions are adopting. These big companies are buying crypto.
Right.
Yeah.
And do your research. If you're not going to read the white paper yourself, at least watch a YouTube video of someone else reading it so you understand what this company is doing. So when you were talking 2025, you're not just holding some useless meme that isn't even going to do anything, So I think that's another thing to say before we head out that I know you touched on before, but to reiterate, use cases. These are technology companies. They're not just currencies. So see what that technology will be doing. And if you can imagine it actually being used in the world and you believe in it, you believe in their executives, their CEO, and you want to put your dollars behind that because you technically are buying shares of the company in a way. So.
And I'll tell you, I sleep better at night. The first time when I bought my first Bitcoin, I said, man, my kids are going to be okay. If I keep making decisions like this. And the funniest thing, having kids, I have an 8 and a 5-year-old. My 8-year-old, my sister tried to give him some money for Christmas or something. And he's like, I don't know, just give me Bitcoin. And that right there, I say, you know what? He's going to be okay. He's going to be all right. And, it's a great moment in time. It's a beautiful thing to see your friends and your family thriving. And of course, we want everyone to invest properly, right? But it's not going to happen. So, give them some time, come in. You're going to have success. And everybody's not going to listen to you. Every 20 people I talk to about crypto, maybe one actually goes and buys crypto or does their research and then goes by and buys. So, that's kind of been my frustration is trying to get everybody, come on, let's all get it, but then you realize you're like, everybody has their own thing going on. Everybody has their own risk levels that, I'm into taking risk. I'll put the house on it, but that's just me. So.
Good deal. Yeah. So you almost got me to make a prediction, but I'm sticking with, we're going to see adoption long term.
All right.
We're going to do this once a year and see how close we are and where we were right and where we were wrong. And we can do a review of the XRP situation and the Swift situation when this infrastructure is actually launched and working, and we'll see how it all panned out. It's going to be really cool to be able to look at this and then to talk about how close we are and how it ended up.
Yeah, well, I'll be glad to come back for that. So.
Excellent, man. We got to have you back on the regular. But Hey, thank you so much, Kyle. Really appreciate all your insight and all the gems that you've dropped on our listeners. And we got to have you back soon. All right.
Yeah, let me know. Appreciate it. Thanks for having me, guys.
Yeah, no problem. You have a good one.
You too.
All
right.
right.
Peace.
See you guys next time. Peace.